Welcome back to Adam Theory, where we talk about investing, startups, and life in general. Today, I wanted to make a quick video talking about one of the biggest lessons I learned in my first 15 years as a stock trader and investor. A few years back, I invested a significant portion of my 401k into a little-known e-commerce software company known as Shopify. At the time, it was trading around $20 to $30 a share, and my thesis was that people were going to want to find more and more alternative solutions to selling products online, and that not everyone wanted to focus on using Amazon as that platform. And that's where Shopify came into the mix. It focused on selling products using their native platform and made getting started a breeze for people that wanted to start their own companies selling their own products. And so I made a long-term bet that Shopify would be one of the first major movers in this market and disrupt what already existed in the ecosystem. Now let's fast forward to 2020, before the black swan event that had the market sell off. Shopify was my best performing asset in my portfolio. I locked in a very high percent return on my trade. I got in the 20s and 30s and I sold at roughly around $400. Now on the surface, you might be thinking to yourself, how is this a learning experience? It sounds like you're just bragging about a trade. Well, the issue is I lost sight of why I invested in this stock in the first place. I think it's important for everyone to have a journal for when they're investing, because it's important to know the reasons why you're getting into a stock investment. It's a commitment, and if you're an investor and not a trader, these commitments generally last for multiple years. When I first invested in Shopify, I thought it was going to disrupt the status quo, thought online shopping was the future, and I thought that there was many trillions of dollars left on the table for someone to grab. Now, when the sell-off occurred, I threw all reason out the window when I sold my shares at $400 a share. Because had I taken just one moment of time to think about it, COVID and the pandemic was one of the best reasons ever to hold on to Shopify with a vice grip, because had I done that, what happened in the next 12 months would have made my return even that much more significant. Now, some of you might not know, but Shopify is trading right now at about $1,400 a share. So after I sold, Shopify went on to gain another $1,000 per share in price. I left a lot of money on the table because I got impatient, because I got scared. I let fear of the markets play the determining factor on how I traded the asset. It's one of the biggest life lessons that I've learned in the investing world, is to not let fear and my emotions take over when the stress is highest. Because at the end of the day, that's what the markets are trying to do. It's trying to shake you out so it can get a better deal and screw you over. Now, I didn't get screwed over because I got in early enough, but it still meant that my 1,600% gain could have been closer to a 5,600% gain. Now, at the end of the day, you can't lose sleep over that, right? That's what investing and that's what trading is. You make decisions and you move on from it. But I would argue that if you don't learn from those decisions and those mistakes, then you're not growing as a person or as an investor. So I like to remind myself about that day. I like to remind myself about the outcomes. And so even though I don't own Shopify as a stock in my portfolio any longer, I still track the share price because it's a constant reminder for me to make sure I don't make any irrational decisions when I'm trading or investing in the stock market. So why does this matter? Because every trader or investor has dozens, if not hundreds, of these types of stories that they can recollect. And it's funny because they can recollect it with so much detail because it's ingrained in their brain, it's burned in their memory because of the pain that they've suffered from making a bad call on a stock. Some trades hurt more than others, and for most people, you can get over them. But there are some trades that leave a lasting impression. And I think those are the ones that you can grow from the most. Social media influencers only talk about the wins. They only talk about the hype. But they rarely talk about the losses or the mistakes that they make, because that type of content doesn't really work as well. I believe that this is one of the biggest one of the biggest investing mistakes that I've ever made in my 15 years trading and investing in stocks. But I also think it was one of the best mistakes that I've made too, because I learned from it. And every day when I go back onto my markets to make trades, I think about that move before I make a buy or a sell decision. I also know that this is a long road ahead of me. I plan on being an investor for quite some time now. I've got many years ahead of me for me to make more decisions and more trades. I'll be honest with you, I think about that trade more than I like to admit, because I left thousands of dollars on the table. I think about what I could have done with that money in future investments, but I think it's also important for me to keep that as a constant reminder. It keeps me humble, it keeps me on my toes, and it's a constant reminder that you need to be rational when you're trading the markets. When you let emotion get in the way, you make mistakes, and you do things that you're going to regret. I think it's important for every trader and investor to keep a journal. And in that journal, they need to talk about when they enter, why they entered, what convictions they have, what assumptions they have, what do they need to see for them to exit, what do they need to see for them to hold. These are all things that you need to live and die by, because if you don't have any strict standards as to why you're doing it, you're just going to end up doing it poorly. You're never going to get any consistency. You're never going to see your portfolio grow. And so personally, as a result, I'm much more rigorous in my process. I have a journal that talks about every trade I've made and why I made that trade. It doesn't need to be handwritten. It can be in an Excel sheet, but it's something that people should do, because honestly, you need to understand what you're doing and why you're doing it. Create a process. Without process doesn't come any perfection. Next time you decide to buy or sell a stock, ask yourself, what were your convictions before and what are they now? Am I trading for the short term or am I trading for the long term? I broke my own rules. I wrote in the journal, Shopify for me was supposed to be a 10, 15-year hold, and I sold after 5 years. And as a result of that, I made the mistake and I paid the price. Is it the ultimate price? No, because I walked away with a profit. So I don't think it was all a loss, but at the same time, I definitely left money on the table, and I definitely regret that decision today. But it's made me a better trader. It's made me a better investor. But I think it's important for people to realize that mistakes are made. But just like social media and Instagram, you only see the good stuff, right? Everyone hides the bad stuff. I think more often than not, all those people you see with those perfect trades are lying, and they're holding back, and they're not telling you the truth. Everyone's different. Everyone has different circumstances. Everyone has different trades. As a result of that, if you hold yourself to someone else's standards, you're never going to be satisfied. Learn and grow and build off of your own knowledge and your own experiences. But if some of my mistakes can help you learn faster, then I'm all for it too. The TLDR is, I made a good investment, but I got anxious, I let emotions get the best of me, and I sold way too early on one of the trades of my potential lifetime. Now I know there's more trades around the corner, and I have to remind myself that every day is a new opportunity, but it still hurts when you look at the stock ticker continue to go up and up and up. And at the end of the day, hindsight's 20/20, and nobody's perfect. Anyway, I've got plenty more bad beats that I want to talk about in future videos. So if you thought this was interesting, give me a thumbs up, subscribe to the channel. Thanks for joining me on Adam Theory. Stay curious, ask questions, and build your own theory. Thanks.